Aloha and welcome to Java. Thank you so much for spending it with me. This is for Wednesday, February 14th, 2024. It is Valentine's Day. So I wanted to start with kind of a holiday appropriate story. If you got a broken heart, no worries. Abbott Labs has a heart valve repair device and it's got FDA advisors backing now. So if Abbott Labs looks familiar, they are the same ones that had created the testing kits that were distributed globally for the cough that just kind of hit the world. So positive for them. Let's go right into our indicators. And with the market, we've got the MMRI elevated off of yesterday's CPI prints. The inflation numbers came in high, showing that it's more likely that the Federal Reserve will not be cutting soon because they're concerned with this inflation. And we know that the inflation is going to continue. But with that, there was a knee jerk response into the dollar because the risk going up, the relative strength of the dollar increased as well as the 10-year yield. So that basically made everything less expensive. When the dollar gains power like that, everything else becomes relatively less expensive. Stocks dropped. So right now, though, even though the stocks are down pre-market as I'm doing this, we've got the futures in disagreement. So looking at the levels on the bulk of charts and what's going on, looks like there will be a recovery here. So be very cautious if you're short for the short term, because I think there will be a recovery for today, at least for a bit. And then after that, I'm still buying insurance for the longer term, meaning I think it will continue down. Short word on why I do this. I do this because I've had a couple of people asking me if I sell trading courses or anything else. I don't. I purposefully do not sell things on this channel because I want the word to get out and I want people to have an alternate source that they will think about and see the differences in these stories from mainstream media. So I would like to send a special shout out to all of you who have been supporting, not just supporting, but also sharing my work on this channel and then being with every day and supporting this. I really, really appreciate you and you are making the difference. Truly. Thank you all so much. So going on with the calendar, we're watching crude today, as well as a couple of Fed speakers. So the Federal Reserve speakers are basically how they manage the market into going the direction that they need to. So I've got events for Thursday up here because prior to market open, we've got jobless claims, which will basically do the same thing as well as retail sales as inflation. They're an indicator that the Federal Reserve is using as a decision for their point in rates, whether they cut rates, whatever they do. So with earnings, this is our earnings for the day. Got a few significant ones, particularly Oxy, and then we've got a few coming in tomorrow prior to open. So I put them here so you can kind of set up your trades for the morning by the end of the day when the volume is higher. So currently, after what happened yesterday, they did lower the basically the expectation chances of rate cuts for March. My opinion, rate cuts have a snowball's chance of getting elected. Why is this? Because they are not ready. They have to have more job losses before they do this because they cannot reverse the move. Not only that, but the ECB and Bank of England, a couple of others, will have to cut rates either at the same time or prior to the United States. So we'll keep an eye on that. So we've got credit tightening in the fourth quarter, but we've got lenders still upbeat about 2024. So some lenders are upbeat and will go in, but there's still more correction in the banking sector coming, particularly with the real estate, which has not hit yet. It's going to, and in March 11th, they are cutting short the bank term lending program. So I think there's a lot more things that could go on with this that they're kind of basically trying to cover over so there aren't bank runs. So I want to go a little bit more specific with the stock, in particular Boeing Airlines. So I spoke about this before. They're strong, and I was purchasing them, saying the level that I was seeing on my charts, not financial advice here, that the 200 level was very strong, and that's proven well so far. So right now they are basically taking over from a Thai engine supplier, so they're getting orders there, even though the max is down. They got a large contract from the United States Army that they're now renovating. They're basically creating Chinooks, and that's what these are. We also call them flying bananas for kind of obvious reasons. But anyway, this is creating and saving thousands of jobs in Ridley Park in the United States. So, on the surface, looks like a good story. It's going to bolster Boeing. I had said before, they're heavily into the military industrial complex as well. They're much larger than people give them credit for. And not only that, but the point I want to bring up with this really is that this military contract is paid with tax dollars through the government. So this is a quiet mechanism they're using to filter tax dollars back into the private sector with these contracts. So all of these jobs that are being created and saved in Ridley Park basically are government jobs. So once you hit that point of 50% of government jobs, government created, government funded jobs, it's unsustainable because they're paid with tax dollars from people that are in the private sector. So just a thought on that. So we've got UK inflation. Unexpectedly, it held for January. So this gives them the narrative that they can hold on their rates for now instead of cutting. We've got US inflation slowing but remaining elevated. So still talking about all of these things, they're trying to get them under control. And as I said, they're going to manage this through the wording in their speeches today. And then the numbers we're going to be watching. Again, the jobless in the morning. So I had something very interesting coming through with the earnings. These are all manipulated. And this is perfect case. So they came out with basically their conference, their call prior to their earnings, saying that they were expecting 500 basis point margin expansion for the year. And that's tremendous. So, of course, their stock shot up. This basically squeezed out all of the shorts. And then they came back and said, sorry, we had an extra zero. We actually meant 50. So after that, of course, it plummeted, but not what this is saying from Zero Hedge. And I really appreciate his work, basically clearing out their shorts. We've got Amazon getting hit with a lawsuit over talking about showing ads on Prime Video. So you pay to not have ads, and now they're adding them in. So kind of similar, I pay on YouTube for premium so I don't have to watch the ads. That way I can get more and more information and bring it here. So moving over, I have also been talking about insurance, and this is beginning to expand as an issue. So with this, we've got property insurer already raising rates. Now they're blaming it on climate change, which is kind of the catch-all scapegoat. But the underlying is that property insurance is rising. And I think it's really funny because right after this, they mention health insurers now also calculating in how to navigate climate change as people are falling ill from heat and pollution. Never mind the food or the over chemicals that we're doing to ourselves. But at any rate, talking about that rising. And then right after that, we're talking about higher medical costs pinching insurers, talking about medical insurance. Well, on the background, what happens with this is higher insurance costs with medical goes through a lot of corporate plans. Again, this is the cost of hiring. So when you have this as a labor cost with this increased medical, you're going to have more motivation to cut down on your staff. So we're going to see this manifest itself in a couple of ways. So medical costs going up and then also increasing basically unemployment. So talking about Germany, the banks, they're putting out now that they are preparing for huge loan defaults in the quote unquote greatest real estate crisis since the financial crisis. Well, we kind of knew this was coming, but now they're talking about it. And they're talking about how their economy is still weak. So ECB, this was their official statement, and they're talking about they need assurance of inflation, basically stabilizing prior to loosening their monetary policy. So, translation, they're not going to be cutting rates either, and they need some time, quote unquote, some time prior to cutting rates. So, probably still this year. I don't know. We'll have to see how things going. But in my opinion, definitely not March. And it will be a bit since then after that. So, moving on, this is another one very quietly under the radar. India and United Arab Emirates inking a deal on digital payments and infrastructure. So, very large deal here, and it's being played down quite a bit because the first off, it's trade, moving to digital payments. UAE is trying to become, along with Saudi and some of the others in the area, the head of this technology, moving to new payment systems. And India is looking into building actual infrastructure uh, for moving trade goods. So, moving forward with the commodities and what they've got that they produce, that's quite large. So, we got a new report, just to bring you up to speed, saying the world faces a dangerous decade as instability and military spending rise. Well, the war machine is going to continue because that's what's floating the economies at the moment. But what happened was not long ago, I think this was about 5 hours ago, there was a fire that broke out following an explosion in Iran. It's in their natural gas pipeline. We've been talking about how their economy is strengthening, and certain people don't like that. So they're already talking about how it's sabotage, and they're going to do an investigation. And if you look into the location of where this is on one of their major pipelines, it's indeed justified that they're suspicious. So we'll have to watch what's going on with that. With that, I've got a short update. A lot of updates regarding ChatGPT mostly. So OpenAI now is allowing ChatGPT to store information. They did not before. They were saying there are other concerns with this, but now they're talking about how it's inconvenient, so they're allowing it to do short-term storage. Well, won't be long until they change that. However, we've got NVIDIA also starting what they're calling Chat with RTX. Lets you make your own Chat GPT and run it on your own PC for free. So how do they make money on this? You have to have a particular NVIDIA card or higher in order for this to run. So this is a good play for them to basically bolster sales in their cards. But I actually am very interested in having my own AI. I don't know that I'm going to use ChatGPT necessarily, but to kind of have my own little help here, if you would. So with that, happy Valentine's Day. Please like if you haven't yet. And until I see you again, my friends, stay free.